today I want to show you a trade I took on GBP USD, NAS 100, and gold XAUUSD. So I'm gonna start with XAUUSD. So I want to show you how I took this trade and how I managed to get $278 from one trade. And this trade, I've held this trade for 2 days. Yes, I've held this trade for 2 days. So as you can see my setup on gold. This is gold on the 1 hour. So I initially, let me start over. Let me start over so I can show you how I bagged $270 using this simple strategy. I do breakout and retest, supply and demand, and trend lines. I use trend lines as my support and resistance. So if you want to know about this, and I've seen so many people coming on in my DM asking how they can learn Forex, and actually I've tried teaching people Forex and it's kind of hectic. So I decided I'm gonna do an offer. Instead of charging you 40,000, 50,000, I'm gonna charge you $50. That's I'm a 5,000 Kenyan shillings. If you give me 5,000 Kenyan shillings, I'm gonna teach you how I do my trades, how I enter the market. Remember, I told you, no matter how much you pay for lessons, the lessons are the same. No matter how much time you take, how much you pay for lessons, the lessons are the same. If you go and learn Forex in the UK, learn Forex in Uganda or in Nigeria or in Kenya, Forex is the same. Lessons are the same. There's no any new syllabus about Forex. So if you wanna learn with me, I will only charge you 5,000 and full cost, everything. I show you how I enter. I don't know everything, but I only know what works. You get? The idea is not to become a guru. The idea is to make money from the markets. The idea is not to post screenshots and tell people how much you've made. The idea is to fight poverty. The idea ni kutoka blog. You get? Most of my students actually ni single mothers and stay at home moms. Wengi must stay at home moms ndo mimi nafunza saizi. You get? And at least atukosangi hata 2,000, awakosangi 2,000, 3,000. You get? At least awakosi kitu. You get? That's the idea of Forex trading. The idea of Forex trading is not a Mercedes Benz. It's not going to Turkey, to Italy or anything. The idea of Forex trading is to fight poverty. The idea of Forex trading is freedom. You get? And buy the basic things in life. You get? That's how you should see Forex like that. Right? See Forex as a way of fighting your poverty, as a way of affording the basic needs of life. You get? A way of affording having a comfortable life. So not a lavish lifestyle or anything. You get? We just need a comfortable life, afford the basic needs of life. You get? So if you want to trade with me, if you want to be in my mentorship, I want you to just come to my DM. It's only 5,000 shillings. 5,000 shillings. After a week, you deposit money. We'll be trading together. I give you the signals until you learn. You get? So let's say for a month you'll be okay. You'll be able to enter the market. I'm not gonna teach you everything. I will only teach you what works for me. That's the importance of a mentor. I will only teach you what works for me. You get? If I'm your mentor, you only learn what works for me. You get? And use that to work for you, and teach another person what works for you. That's what happens. Okay, instead of wasting time teaching you overall courses, I teach you. There are so many strategies about Forex. So I'm not gonna teach you all that. I'll teach you the strategy that I use. You get? So today, I wanna show you how I entered this gold today. Yes, on Wednesday and Thursday, I held this trade. Actually, I had two trades. If you can see, this one around here. I had two trades actually. This one around here, and this one the sell one. This sell setup. So let me show you. Let me go through it and show you how I entered this trade and how I got this trade. Okay, so follow me. So I usually go to the daily time frame. So before everything else, I'm gonna delete everything on my chart so we go together, right? I'm gonna remove all the drawings so we go together. You get? The first thing you should do is, first of all, understand the direction of the market. You get, you open your charts and understand the direction of your market. You get the direction of your market. So right now you can see gold has been buying from this, you see, from this demand. You get, so we are on an uptrend. You get, and then there was a consolidation. I marked this zone here as this zone here where the market broke out of. You get, I marked those two zones. I marked my where the market came from, this one, this, let's say this is my support, and I marked my resistance where the market broke out of. You get, so secondly, I marked the highest high the market had gone. You get, the highest high the market has gone. This was the highest high. You get, after marking that, let me use this horizontal, so like that. So I usually mark my zones like that. You get, so the reason why I mark my zones like this is because of retest, break and retest. You get, now this market was being held here for a very long time. You see, all these days the market was trending, was consolidating around here, and then all of a sudden the market broke. So market has been selling all through. So the market broke from this resistance right here, right? So I was expecting this market will come, take this high, and then retrace back and come and test this resistance, turn support, and turn this resistance into a support. You see, they broke this resistance. So I wanted this resistance to come and be tested and make it a support. So I was expecting that. So I was looking for this trade not to go above this high and give me a double top around here, or an M pattern around here, so I can sell back to this resistance to make it a support. You get, and come and test it and make it our support. So after that happened, I saw the market breaking above with momentum above here. You see, breaking above this high. You get, so what I did, I went. So this high, I marked this high as it was supposed to be a resistance, this one, because I marked it. So I wanted the market to come here and get rejected and go down back to retest this zone. So when the market broke this zone, it automatically becomes a support, right? So I already know this is my support now because the market has already been broken. So what I'm looking for, it's buying, because I have a support now. So I go down to my 4 hours time frame. It's very simple, 4 hour time frame. You get, after going to my 4 hour time frame, I check what the market is doing. You get, so I have this zone that I told you it was in the breaking where the market broke from here. You get, so I was waiting for the market to come back. I was waiting for the market to come back. Sorry. I was waiting for the market to come back and retest this zone so that I can buy. Retest this zone so that I can buy. So on the 4 hours, I noticed the market came down and retest this zone. What do you do from there? You go down to the lower time frame. You see, you want to trade what you know and wait the market. If you see the market doing what you are predicting, then go in. You just then go in. You get. So what I did from this zone, you see, now it came. You see, the current market, it came. You see, it came, retested back, bought, come back and retested again. So now it's buying again to this zone. Again, it's going up again, right? Right. Yes. So what I did on the 4 hours, I went to the 1 hour. You get, I told you I usually use trend line, supply and demand, and support and resistance. You get, that's what I usually use. My mouse just it may hang, but it's okay. Now what I did, so I didn't. The market was here when I entered the market. Yesterday, the market was here. The market was here yesterday. Here it was consolidating right here. So what I did, I saw a fair value gap. We all know that a fair value gap is the market, is the enemy of the market. How do we call it? It's the spark of the market. Like it was that it's a spark of the market. Wherever there's a fair value gap, the market must go that direction to fill that imbalance. So I saw this point and I drew out that gap because I saw there was a fair value gap here. See, this one here, right here. So what I did on this fair value gap, I drew my fair value gap. I marked it. You can see I marked it here. That's my fair value gap. And then I wrote, this was my possible selling zone. So I wanted the market to come and get rejected from that zone and sell. You see, get rejected here because of how the market was approaching this zone. I knew this place will hold the market. So I waited for the market to come, get rejected here, and sell again to this level, creating a double top so I can buy again, right? Creating like the one that is here, another double top that is here, right? And so that I can buy again. So what happened? I went to the lower time frame, to the 15 minutes. You see, so that I can see what is happening. You see. So that I can see what is happening. You see, when I noticed the market broke out of this zone. So most people are waiting to sell from here. You see, there was an equal high, and obviously where there's an equal high, there's liquidity above this zone. So I knew these market movers, they must come and sweep this liquidity above this equal highs. People sold from here. So I knew lazima wakuja watolewe. They must come and get kicked out of so the market can continue to its actual direction. So what I did not enter a sell. I knew that because this fair value gap was, the market was going towards this fair value gap and towards this equal high. What I knew is because this equal high, the market cannot reverse back to sell before they take liquidity above this equal high, before they take these people are up here. You get? So what I did, instead of me selling, I noticed the market came. I noticed the market came right to this fair value gap, and it was never rejected. It came with momentum and broke it up to this zone, creating a high, creating this high. So what I did, I came and drew my high and marked my current high, so that I want to trade now, and marked my current high. So I waited for the market to retest this zone, and then if it was going to be a fake out. If it was going to be a fake out, this buy was to be a fake out, the market would have come aggressively back inside this fair value gap and continue selling. So I saw this market did not even engulf this candle, so it came without momentum. So I knew this market is still going up above. Then I had noticed, I forgot to tell you that there were two zones. You get? There were two zones. You see, there was this zone here, this one here. There were two order blocks. So I had one order block. I had another block above here on the 1 hour. So there were two possible selling zones. So the one of it, I waited for the market. I wanted the market to come here. You get? Right there, and sell again. So I knew there were two places I could sell from this gold. So what happened? I came on the 15 minutes. Right, I just explained to you what happened, and then I saw this market is not even breaking down. So what I did, I took my longs. I was just playing smart. I did what 90% of people are not doing, or 100% of people are not doing. I bought instead of selling. People will sell here, so I bought this price. I bought that gold that day. I bought this one up to this level and put my stop loss up below here. No, not below there, below this fair value gap here. So I put my stop loss here and my take profit above here, above this high. You see, I drew a high here. So I put my stop loss, my take profit here, my stop loss below this fair value gap. There's like a small fair value gap here. You can see there's like a small order block here. So I put my knee below this order block, right? So tukapamoja tuhamwe dina. Now sasa, when I saw that, I knew now this price will come here and then give me a double top so that it can sell. You understand? That's what I knew. So I wanted to buy up to this double top. Then I saw this market is continuing with the momentum to break this high. I knew now we are coming to the second selling zone. You get? And in most cases, in my experience, I've noticed that if we have two order blocks, two demand or supply, the first one, it will always fake people out, will always fake out, so that people can enter from the first one and then get taken out, and it will go to the second one. Most cases it happens like that. So what happened, I saw the market coming all the way, breaking it, retesting back to this. I told you, when a resistance is broken, it becomes a support. So when I drew this resistance to the where I put my take profit, the market will come and retrace back to that, making it a support, and then buying back to this zone. You get? So what happened from there? I went to my 1 hour. You get? Because I want to now to enter the sales now. Okay, I want to enter the sales now. So I've already bought this and won the trade. So I want to enter the sales now. I went to my trend line, took my trend line body to body. You get? And got this. So what I got that body to body. I got that. If I did this body to body, I got that. What did I got? A possible double top. You see, a possible start Kasako, a possible double top. I got a rejection here. You get? You see, a rejection, one rejection there. Okay, another rejection here. What is this? A double top. And if you want to know your analysis, lazima zialign. They must align. They must align. I'm telling you, they must align. And when I'm trading a double top, we usually wait for the neckline to break. Let me just tell you how simple these things are. And marking your zones. You see, I marked this high on the lower time frame, and I said my take profit should come here, right? And then this place, this high was supposed to be a resistance, but it got broken and retested and became a support. Now after being retested, it bought back to this trend line and created a double top. Now this resistance I had drawn, where I took my profit, my first profit, it became my neckline on this support, on this double top. This double top, it became my neckline. So when you are trading a double top, when you're trading a double top, you should always wait. When you're trading, let's say you're trading like that, like this, and then like this. You must always wait for this double top to be broken like that. You get? So you must always wait for this neckline to be broken. You get? So that's how I enter my trade. So I saw a double bottom, and I saw my previous support becoming my previous resistance becoming support. It became my neckline. So I knew if this market breaks this neckline and retest it, you see what happened here? It broke it and retested. I entered those sales. That's how I got this trade. That's why I bagged $278, almost $40, almost 40,000 Kenyan shillings in 2 days. You see, I waited for this. This became a neckline, so I waited for that neckline to be broken. You get, and then I entered this trade because I have a bit of experience. So I entered on this neckline. When I saw, I put my selling orders there, so, and put my stop loss. My stop loss became here. You see here, above this previous high. I'll show you how to put stop losses. So, and then I targeted. See, I targeted here. Let me show you how to put stop loss, why I put it exactly here, and it got exactly here. Let me show you something. Let me tell you a secret what I do. When you see a market like this with wicks, you see there's a wick here, this here, this wick here. When you see something wicks, do not put your stop loss on this first week. Put it on the second week, or your take profit, put it on the second week. If you do not put your take profit on this week, put it on this second week here. If there are 2 weeks here, like let's say if there's a week here, this if you see this week and this week, you get, if you want to put your take profit, do not put it here, put it on this week. So the same thing I did. You see, this is a secret. You see this week here, if you want to be guaranteed, always put it on this week. This week will always become a resistance, will always be a resistance. You see this one, put it on this second week, don't put it on the first week. This one, it will always become a resistance. That's why I put my take profit, and it always smash. So that's how I entered this trade, get, and bagged 40,000 Kenyan shillings. That's $278 dollars. So if you want to know about this, more about this trading, there's another one I entered on Nasdaq. I'm gonna do that in after this video. I will upload it, and on GBP/USD you can see what GBP/USD is doing or what it did to me. See now today we had news. See, this is one, the same strategy, supply and demand and fair value gap. This is a fair value gap that was here. This was our supply right here and another one right here. So in most cases I saw this, you get this rejection, I entered there, and it sold all the way, all the way. I was targeting this low. See this low? I was targeting this low. You see, I was targeting this. You see this one? I entered. I always tell you, never enter on the first week. I enter on the second week. I put my, see, it got smashed. I don't put on the first week my take profit. I put on the second week here, and it got smashed like this. You see? Now I went to Nasdaq. I will show you where I entered Nasdaq and GBP/USD. So this is the same thing.